we lack interoperability amongst the payment methods that we have. So when it comes to a remittance company wanting to expand to another market, outside of just having to deal with the regulator, you also need to do new integrations each and every single market you go to. Now is when we are seeing various MNOs across the continent, ideally sharing sort of a one API, but at the end of the day, you still need to go through the process of new contracting when you get to a particular market. So yes, in terms of infrastructure, we're still very fragmented. Our systems are not speaking to each other. So you'd end up having 30, 40 different integrations within a startup just to cater for remittances. It probably is not even between East or West Africa, but just within the East African region or just within the French-speaking West Africa region.
Hey, welcome to the FinTech Frontlines by Cora. This podcast is a collection of timeless ideas on how to build, launch, and operate a fintech in Africa from the most experienced minds in African fintech.
In this episode, Hyginus and Grace talk about the numerous regulatory hurdles remittance companies face while building. They also discuss how to deal with these hurdles as a remittance company and an infrastructure provider.
Compliance is quite heavy, but it's also very simple, right? Compared to Africa, because all you need is to, write your compliance policy and prove to the regulator that, you've written these policies and you want to, adhere to these policies and obey them, and they are able to offer you a license to play in the industry. So somehow it's very hard, that is the limitation of entrance, because people see it like, how am I going to write, this 65 pages of policies, to run a business, which is not very, very, this is not something we do in Africa, to be honest. If you pay somebody's money, they can, share a particular document and you can get into the market. So for us at Cash Remit, I'm very sure that we get into this business when, none of the African origins in diaspora was thinking that you can actually propose to the regulator, because in Australia, the same regulator that regulates our industry regulates the banking industry. So, and when I met my co-founder, the discussion was like, look, I'm from the technical background, but I'm always scared about this compliance thing, government policies and all that. So, we begin to, synchronize synergy and say, like, we can do this. It's just about documents, just about telling the regulator what we want to do, put it in writing and propose to them. And fair enough, when we, come up with our compliance policy, but at a point we need to hire a consultant that helps us to navigate, through all the processes. But then when we have, a process, because in the diaspora, what the government want to see is like you have a process in place, and you're familiar with the process. And it was very easy for us to, get the remittance license to start operating. So it's not a big deal. But the biggest challenge we face is not the regulator, because in a country that they accept competition, they allow everybody to play, in a public space. It's not a problem. The biggest challenge that we have is, when you see the banks, which are the big players in the FX industry. And I know that most of us in Africa as well, or everywhere in the world, know that the bank, are the biggest enemy of remittance company. They don't like to support us. They believe that we are high risk, but while we do better work than the banks. So that's the biggest challenge when, you're a remittance company approved by the regulator, you don't have a bank account to operate. So that's where the biggest challenge comes from, for us operating in the diaspora. Even you go to the UK today, it's hardly as a remittance company to own a bank account. Barclays Bank, HSBC, they can open an account for you if you are from the money remittance industry. But I don't know why that reason, but somebody can answer. Those are the challenges. But in terms of license, it's very easy. If you have a policy in place and you're able to prove to the regulator that these are your policies that you want to follow and adhere to it, you definitely be approved for operating as a remittance in diaspora.
As much as we have digitized, we lack interoperability amongst the payment methods that we have. So when it comes to a remittance company wanting to expand to another market, outside of just having to deal with the regulator, you also need to do new integrations each and every single market you go to. Now is when we are seeing various MNOs across the continent, ideally sharing sort of a one API, but at the end of the day, you still need to go through the process of new contracting when you get to a particular market. So yes, in terms of infrastructure, we're still very fragmented. Our systems are not speaking to each other. So you'd end up having 30, 40 different integrations within a startup just to cater for remittances. It probably is not even between East or West Africa, but just within the East African region or just within the French-speaking West Africa region. And because of that lack of interoperability, obviously everything else skyrockets. Everything else becomes a bit more expensive, from compliance to the fees, and again, as well to FX.
Thank you for listening to this episode of FinTech Frontlines. For businesses that want to build in Africa, Cora provides you with delightful payment products for collections, payouts, and settlements. Learn more at corahq.com. Like and rate this podcast so more people like you can find it.